Ever wondered if the massive boom in artificial intelligence could actually be heading toward a major crash? Everywhere you look, AI is transforming industries, fueling stock market rallies, and dominating headlines. But here's the real question. Is all this excitement justified, or are we in the middle of another tech bubble that's about to burst? Hi everyone, I'm Helen, and welcome back to the channel, where we make complex finance and tech stories simple and actionable. Today, we're digging into the AI boom, exploring the warning signs of a potential bubble, and breaking down what it could mean for you as an investor or just someone trying to understand this wild new era. So let's start with the basics. What exactly is a tech bubble? A bubble happens when expectations rise much faster than reality, when prices, investments, and excitement get ahead of actual profits and long-term value. It's like everyone trying to get in before missing the next big thing. And then the air suddenly comes out. We've seen this before. The dot-com boom in the late 90s, crypto in 2021, even NFTs. Each time investors poured money into anything that sounded futuristic, and each time many of those stories ended badly. Now, some analysts say the same pattern is forming in AI. Think about it. AI companies are seeing valuations skyrocket, even though many are still figuring out how to make consistent profits. Some experts have compared this to the dot-com era, where potential was valued more than actual performance. And yes, even some of the biggest names in investing are sounding the alarm. Michael Burry, the man who predicted the 2008 housing crash, has publicly warned that AI tech valuations are showing early signs of bubble behavior. So what are the warning signs? Let's break down a few of the big ones that investors and analysts are watching closely. First, insanely high valuations. Some AI-linked companies have price-to-earnings ratios that make little sense based on their actual revenue. They're being valued not on what they earn today, but on what they might earn 10 years from now, assuming everything goes perfectly. Second, massive infrastructure spending with questionable returns. Across the world, companies are building enormous data centers and pouring billions into computing power, all to support AI growth. But here's the thing. Many of those same companies haven't yet shown meaningful profits from those investments. In fact, some studies show that up to 95% of businesses using generative AI aren't seeing much financial return yet. Third, leverage. Some of this growth is being financed by debt, long-term loans used to build infrastructure that might depreciate quickly. That's a red flag, because if demand slows or profits fall short, those debts can become a serious burden. Fourth, over-concentration. A handful of tech megacaps are carrying the entire AI market. If even one or two of them stumble, the ripple effects could hit global markets fast. And finally, over-promising. Some companies are projecting AI will completely reshape everything instantly. That kind of language can inflate unrealistic expectations. And when the results don't match the hype, investors usually pull back fast. Now, let's look at what institutions are saying. The Bank of England recently warned that equity valuations in AI-driven tech firms look stretched. They pointed out that expectations are rising much faster than real-world profitability. Analysts from multiple firms agree that while AI has enormous long-term potential, short-term returns are unlikely to match the current level of excitement. Even industry veterans are cautious. Others believe the bubble has already started to deflate, just more quietly than before. So what could actually trigger the burst? It could be slower than expected profits. It could be that AI adoption doesn't scale as fast as people expect. Or it could come from something bigger, like regulation, energy shortages, or even another economic shock. When investors realize the returns won't match the hype, sentiment can turn fast. And when that happens, speculative money disappears, and companies that relied on hype start collapsing. But a burst doesn't mean everything disappears. The strong players, the companies with real products, real profits, and real innovation, usually survive and come out even stronger. Now, let's talk about what this means for investors like you and me. The first thing to remember, not every AI company is a winner. The hype makes it feel like every business with the word AI in its name will soar, but history says otherwise. If you're investing, focus on fundamentals, things like cash flow, earnings, and long-term sustainability. Second, diversify. AI is exciting, but putting all your money in one trend is never smart. You want exposure to innovation, but with balance. Third, manage expectations. AI will absolutely change the world over time. but technological revolutions take years, sometimes decades, to translate into real profits. We saw the same thing after the dot-com crash. The internet really did change everything, but most of the early players disappeared long before that happened. Fourth, understand the macro side. If the AI bubble deflates, it could impact entire markets, not just tech stocks. Infrastructure spending, chip demand, even energy markets could slow down if the AI wave cools off, and that could ripple through the global economy. So how can you spot bubble warning signs for yourself? Ask a few key questions before investing. Are these companies making real profits today, or just promises for tomorrow? Is there a clear business model, or just buzzwords? Are they spending billions without showing a path to returns? And how much of their valuation is based on hype instead of hard data? If too many of those answers make you uneasy, that's a red flag. Now, here's the nuance. The AI boom isn't all smoke and mirrors. There's genuine progress happening, and some of it is world-changing. Breakthroughs in healthcare, productivity, and automation are already real. The key is to separate the hype from the durable innovation. If a correction happens, it might not be a bad thing. Think of it as pruning the tree so the strongest branches can grow. So, to wrap up, yes, the AI boom could be showing early warning signs of a bubble. Yes, valuations are stretched, investments are massive, and expectations are sky high. But the core technology remains powerful, and the long-term story is still being written. For now, the best move is to stay informed, stay skeptical, and stay diversified. If the bubble pops, you'll be ready. And if it doesn't, you'll still be well-positioned to ride the wave responsibly. If you found this breakdown helpful, hit that like button, subscribe for more in-depth finance and tech insights, and drop a comment below. Do you think the AI boom is a bubble, or just the beginning of something bigger? Thanks for watching, and I'll see you in the next one.